Well, the top story tonight, India's third quarter GDP growth slows to 4.4%, but remains largely in line with estimates. Now, the NSO's office revised growth in FY22 sharply higher to 8.3%. Investments, meanwhile, drove GDP with the 9.2% growth in gross fixed capital formation, but private final consumption slowed to 2.1%. Lata Venkatesh is here, joining us now with a sense for decoding these GDP numbers. Lata.
Yes, the third quarter number coming in at 4.4 may optically look lower than the 4.7% which our poll threw up, but it's actually a good number because the base year has been revised. Like we had warned, the government was not just going to announce the third quarter GDP number, but it was also announcing the first revision of FY22, the second revision of FY21 GDP, and the third and final revision of FY20 GDP. Now, what we have got in terms of good news is that the previous numbers have all been revised higher. FY21 has been revised higher. FY22 has also been revised higher. So much so that FY22, whereas we were working with 8.7% overall GDP growth, the new GDP growth is 9.1%. So on a higher GDP, to be able to produce a 4.4% third quarter is actually a good number. So overall, growth looks positive. Now let me find some chinks in the armor. They come from the expenditure side. If you looked at the third quarter from the expenditure side, then personal final consumption expenditure has come in at only 2.1% higher. Government final consumption expenditure is about 0.5% lower than what it was in third quarter last year. So clearly, government not consuming so much that was expected. The positive from the expenditure side is gross fixed capital formation has risen by a huge 8.2%. So largely, the third quarter growth is an investment-led growth. It is not a consumption-led growth. That is good in a way because that will improve productivity in the future. But if consumption doesn't pick up, we will have a problem reaching the 6.4% GDP growth for next year. All these are tentative because there is a large discrepancy number, which means the government is not, the NSO is not sure where to fit it. So it's quite possible that the third quarter numbers are going to be revised. But such as they are, the output is good, strong. The only negative part is consumption is weaker than we would like it to be.
The government was starting to taper down its consumption figures anyway. So that is not unexpected. The real question is private consumption. You know, what's going on there?
Okay.
From, I think, last quarter, it was something like 9%.
Yeah.
And then that coming down to just 2% is really quite shocking.
Most of the industrial subsectors have done better than what we expected or in line, and agriculture has also been in line. This is a quarter where the GVA growth is actually higher than the GDP growth. And I think this is happening after a gap of at least a couple of quarters where the wedge is negative between the two instead of quite substantially positive as we saw in the last couple of quarters.
The broad story is that they're still holding on to the 7% forecast. Whereas, RBI's number of 4.4 in October, December, that's exactly bang on target. But then they have a lower forecast of 4.2 for January, March. I think that number has to be higher if you have to tally up to, 7% growth.
Consumption growth was much weaker than at least what we expected. We were expecting consumption growth to be close to 6%. But we understand that the base has been revised upwards. 4% overall GDP growth, I think it's broadly in line with the expectations. We were at 4.5%. The details are very different from what we were expecting.
Well, meanwhile, India's chief economic advisor, Ananta Nageswaran, remains upbeat on the state of the economy. He said that the growth momentum has been maintained and the 4.4% rate of growth is largely due to the base effect. He also warned about prospects of an El Nino. The Met Department has issued a warning that heat wave-like conditions can persist from March to May. The CEA said that we may need monetary policy and supply-side measures given the fears of an El Nino.
We know that there have been some slight uptick in the inflation data for January, and RBI also has maintained its forecast that inflation will come down gradually. And we do have some uncertainties related to now the monsoon because of the El Nino activity, etc. So it is something that where we need to be ready with both supply side and monetary policy measures in the course of the next financial year.
Well, sticking with the macros, India's 8 core industries grew by 7.8% in January compared to the same month of last year. That's a tad higher than the 7% growth registered in the month of December. Well, in more macro data, fiscal deficit for the April to Jan period has touched 67.8% of the full year target. Overall receipts in these 10 months have come in at 19.7 lakh crore rupees versus 18.7 lakh crore rupees in the same period last fiscal. On tax revenue front, government managed to collect 23.6 lakh crore rupees from April to Jan versus 21 lakh crore rupees last year. Well, on to the Lal Street now. The markets closed in the red for the 8th straight session. Investor wealth to the tune of 25 lakh crore rupees has been wiped out in 2023 so far. This is the biggest ever drop in market cap in the first 2 months of a year. Sensex lost over 300 points and the Nifty lost about 90 points. Prashant Nair is joining us now with a quick market wrap. Prashant.
Another down day for the markets, and 8 days in a row, the market has ended in the red. There's got to be some record of sorts. And, you know, yesterday's low went. One was hoping that would hold, but we made a new low today. There were attempts at a bounce, especially in the last hour and a half or so, but they were mostly sold into. Like yesterday, banks did well. I mean, the bank index was up 1% yesterday. It was in the red, but a vast improvement over what the Nifty was able to do. And the other silver lining was the broader markets. Mid-cap and small-cap indices ended about 0.5% and 0.75% in the green. And I'll get to stocks there in a bit from now. Now, the Adani pack had a bit of a reversal on the upside, and that's important to mention because they've been falling like 9 pins for some time now. So Adani Enterprises, Adani Ports, Adani Wilmar, Adani Green, Adani Power were the top gainers in that basket. There were losers there as well, which we can talk about later. But I mean, there was more up than down, and it's not been that way for some time now. In the broader market, I think there were lots of gainers, and I'll stick with that. So Z was a big gainer, big reversal from yesterday's loss. Triveni Turbine went up sharply. Escorts bounced off an important trend line we highlighted in the morning. JSW Energy, Uflex, Bank of India, Phoenix Mills, LG Equipment, Berger Paints, Medanta, Lal Path Labs, and so many others. And I'm only highlighting things which went up with solid volumes, so you can imagine the list was longer. Broader losses coming through in news-related names. So Vedanta saw a sharp cut, and we've been highlighting reasons why. Paytm lost quite a bit. Cipla was under pressure. Tata Elxsi and APL Apollo were some of the others which came under pressure. As I said, the Nifty broke yesterday's low. The fresh low today was 17,255 on the Nifty. It's also closed below the 200-day moving average, which I think is important to note. From a global arena, equity stability is important, but I think what markets will also watch is cap on gains as far as the dollar index is concerned. It fell from the 105 plus levels to 104.6. And I think if it remains here or drifts lower, that should provide some catalyst for perhaps a bit of a bounce after so many days of continuous fall. Back to you.
Well, just as Prashant was mentioning, some respite there for Adani stocks as the group gained market capitalization after nearly 3 weeks. Adani Total and Adani Transmission were the only 2 of the 10 group stocks that ended the day in the red. The Adani stocks gained a market cap of close to 30,000 crore rupees today. However, since the Hindenburg report was released on Jan 24th, the stocks have lost market cap of a little over 12 lakh crore rupees. As things stand, the market cap of the Adani Group is back above the 7 lakh crore rupee mark. Meanwhile, shares of Vedanta declined for the 8th straight trading session. The company's overseas bondholders have been jittery for the last few days about debt repayment, and the bonds have been losing value. As the debt concerns mount, Vedanta spokesperson said that there is no question of a default. Here's Nigel D'Souza with all the details.
Well, the Vedanta Limited stock is under pressure as the street fears a default at the promoter Vedanta Resources end. Now, the long-term debt maturities for the next few years are a little more than $7 billion. In the first half of next fiscal, there are maturities amounting to around $900 million which are due. And since there is fear of default, the bond prices have been falling, which has an inverse relation with yields. Now, the promoter entity holds stake in both Vedanta as well as Hindustan Zinc, and rather large ones. The problem is that most of those shares are pledged. So the fear is that these pledged shares could possibly hit the market. Now, the trouble started mounting when Hindustan Zinc's plan to buy out Vedanta's international zinc assets hit a roadblock. This as the Government of India opposed the transaction. Keep in mind, the Government of India had roughly around 30% stake in Hindustan Zinc, and they also have board representation. Now, the proposed transaction was that Vedanta would sell its international zinc assets to Hindustan Zinc for nearly around $3 billion. That would mean the deal would be done at 10 times EV upon EBITDA, which is very, very expensive for a metal company. The other problem is it would drain Hindustan Zinc of all its cash in its books. The big question is Vedanta Resources able to wriggle out of this? The answer could probably be yes, because they could use their credit lines with banks to refinance the debt in the near term. They could also approach the Government of India, look at reworking this entire international zinc deal. The government, remember, had asked them to explore other cashless methods for the acquisition of the assets. And maybe possibly as well, Hindustan Zinc goes ahead and simply pays out a large dividend. That flows to Vedanta Resources via Vedanta Limited. Valuation-wise, well, the Vedanta stock is attractively priced at around 3.5 times EV per EBITDA. We reached out to the Vedanta spokesperson, and the reply was to CNBC-TV18's query that they are in a comfortable position to meet the near-term maturities, adding that there is no question of default, and except around 6.8% Hindustan Zinc shares, other holdings are not pledged, so there is no risk of any further selling of shares.
Well, here's also a quick look at some of the other headlines that we're tracking. Onion farmers in Maharashtra took to the streets and halted the auction in Nashik after price dropped to its lowest level in 4 years. Opposition MLAs wearing onion garlands protested at the Maharashtra Assembly. Union government promised to procure onions and sell across India to maintain uniformity in pricing. The Enforcement Directorate has filed a charge sheet against several Chinese loan app companies. The ED has claimed that these loan app companies were charging up to 2,300% interest on loans. The charge sheet also claims that borrowers' mobile phones were hacked while loans were being disbursed and apps were indulging in blackmailing and harassing borrowers. The DG of GST Intelligence has sent notices to around 100 insurance brokers and intermediaries for allegedly issuing fake invoices to 26 private life insurers. The DGGI has sought evidence of services rendered and information on transactions. Well, at a time when India's air travel demand is surging, Indian Airlines are facing a shortage of aircraft. 6 Indian Airlines together have 108 aircraft on the ground due to supply chain issues and non-availability of engine spares. Going by the available numbers, Go First and SpiceJet have the highest number of planes that are not fit to fly. Madhya Mujawar joins us now with a breakup of these numbers. Madhya, give us some perspective on the situation literally on the ground.
Well, the 6 airlines that we're talking about here are Air India Express, Indigo, SpiceJet, Go First and Vistara. While these airlines have not provided a number of their grounded aircraft, according to a fleet tracking site, these 6 airlines together have 108 aircraft that are not in service, which means they are parked at the tarmac. So let's look at the fleet of each airlines. SpiceJet has 74 planes, of which 29 are parked. That is 39% of its total fleet. Go First has 23 of the 59 planes on ground. Coincidentally, this is also about 39% of its total fleet. Indigo, the largest airline, currently has 40 of its planes that are not in service. This is 13% of its total fleet. Many of Indigo's planes have been grounded since a long time. Air India has 113 aircraft in total, of which 13, that is 11% of its fleet, is on ground. Now remember, the airline has placed huge orders with Airbus and Boeing for 470 aircraft, but those will arrive in a phased manner. We reached out to these airlines asking for reasons why their planes are parked. Most of them have blamed supply chain issues and non-availability of engine spares. Indigo, for instance, says supply of refreshed engines is slower than expected. While SpiceJet also blamed spares shortage, the airline says some of the parked aircraft are redelivered to lessors but are pending deregistration. Now, how does grounding of fleet impact passengers? Lesser number of planes affect the airline's daily cash flows, and moreover, fewer aircraft mean limited room for flexibility and higher possibility of flight delays and cancellations.
Welcome back. Now, the Supreme Court today refused to hear Manish Sisodia's application against his arrest in the Delhi liquor policy case. The court observed that hearing the plea could set a wrong precedent since alternate legal remedies were available. Moments later, Sisodia, along with the senior party colleague Satyendar Jain, quit as ministers from the Delhi cabinet. Timsy Jaipuria gets us more.
Delhi's Deputy Chief Minister Manish Sisodia, who is currently in 5-day CBI custody in alleged corruption charges under the new excise policy, has resigned. Along with him, his cabinet colleague Satyendar Jain too has submitted the resignation, who has also been in jail for less than a year over alleged money laundering charges by ED. Important about the two resignations is the fact that firstly, Sisodia was handling 18 out of 33 departments, including the crucial ones such as finance, health and education. The move comes at a crucial time again, as Sisodia was soon to present the state budget for Delhi in the next few days. Delhi's Chief Minister Arvind Kejriwal has accepted the two resignations. Sisodia was given the charge of Health Ministry or Health Department soon after the arrest of Satyendar Jain, and Jain was actually handling a lot of portfolios, but after his arrest, he was minister without the portfolio but still a member of the Delhi State Cabinet. The Delhi government is now left with only 4 ministers: Gopal Rai, Kailash Gehlot, Imran Hussain and Rajkumar Anand, apart from Chief Minister Arvind Kejriwal. To be seen is whether Kejriwal reallocates these portfolios amongst these 4 or gets in new faces to the State Cabinet. We'll have to wait and watch.
Right, Timsy, thanks a lot for that. Now, the Union Health Ministry has issued its first heatwave advisory today. The list suggests avoiding cooking during peak hours. The Indian Met Department has further suggested avoiding consumption of some beverages like alcohol, tea, coffee and carbonated soft drinks. This comes as parts across the country, including northwest India, Madhya Pradesh and Gujarat, continue to face temperatures 2 to 3 degrees Celsius higher than the normal range. Well, amidst all the discourse surrounding chatbots, AI platforms and automation in general, a group of school children in Chennai have built a machine learning tool to help children with autism communicate better. CNBC-TV18's Jude Sanith meets the team of 4 behind this innovation. Take a look.
At first glance, you'd think these kids were attending a routine computer science class. But Guha, Kamlesh, Jayesh and Avnish, 11th grade students of DAV Boys School in Chennai, are actually busy improving on a software platform they developed earlier this year. A software that helps autistic children understand facial expressions. All it took was a laptop, some scratch code, and time spent training a computer to understand the link between words and human emotion. Children with autism face difficulties when it comes to social interaction and communication, thanks to a series of repeated thought and behavioral patterns on account of a neurodevelopmental condition. Typically, these children have difficulty while performing tasks considered simple by many, like reading facial expressions. Now that's where Avnish, Jayesh, Guha and Kamlesh's ideas enter the picture. They decided to teach a machine learning program how to read facial expressions, which could then in turn help an autistic child cope with deciphering these non-verbal cues. The idea stems from a simple yet crucial concept.
Initially, we created these 5 labels, 5 emotions, and then we went about forming prominent examples for these. For example, I really like the rain today. It is an expression of happy. So we put that under happy, so the machine clearly knows that if a person enters this sentence, it will categorize it under happy and help the autistic person express that emotion.
Over time, they kept categorizing new sentences under emotions like happy, anxious, sad and more, while training the machine to understand them and emote accordingly.
Huge tech giants, when they make machine learning programs, they actually feed their program billions of data. But due to a time crunch, we didn't have that much of time to like feed it that much data. We only were able to feed it like 200 or 300 sentences.
The idea, they say, came from a 21-day project overseen by Chennai-based edutech platform Crew. The startup believes that with 2.2 lakh students on its platform, the possibilities for more such innovation are endless.
I couldn't be more thrilled that these are students who are 14 or 15 years old, who without being told what empathy is and without being told what it means to work for the sake of other children, have done it automatically, and technology has made this possible.
Back at school, these boys are far from done. They're now working on a Python version of their machine learning tool, which means greater accuracy and the capability to input, collate and process a lot more data quicker. For Guha, Kamlesh, Jayesh and Avnish, the project and its success has not automatically meant that they are actively looking at becoming tech founders. For them, it's still about using this technology to reach children who need it. In Chennai, Jude Samit.
Young innovators there making their mark. But with that, it's a wrap on this edition of India Business Hour. Thank you so much for watching. News and updates continue right here on CNBC-TV18.